Good Monday morning. I hope you all had a great weekend. This is Jed Wonderly with the Mortgage Market Minute. Hey, bonds started off lower this morning by about 20 basis points and quickly reversed course when the news came in that June retail sales, of which were expected to be up 0.8%, were only up 0.4%. As you may know, the mortgage bond market and bond markets in general love bad economic news because it means a flight to safety from stocks and other more risky investments over to bonds, driving the price up and the interest rate or yields down. So we should see a little bit of improvement in rates versus what they were last week with where we're at right now. Currently the mortgage bond market is up about 17 basis points, which is a nice swing from the roughly down 20 to start the morning. It did get up as high as 23, but reversed course and is now down 6 basis points from its high. One theme that is clear is lots of volatility. Last week we saw several days where the mortgage bonds were up solidly, 2 or 3 days probably where it was up 30, 40 plus basis points, and ended up being only up 6 basis points or so, 6, 7, 8 basis points. So lots of extreme volatility. I would take advantage of any good improvements that you see. If you have a loan closing in the very near future, I would definitely lock. The recommendation by the service that I use is actually to lock for any loan out to 30 days and float with caution beyond that. We're going to see Bernanke's going to share his testimony later this week on Wednesday with Congress, on Thursday with the Senate Banking Committee. So look for the mortgage bond market to probably be a little bit quiet in advance of that, and look for cues. The mortgage bond market's going to look for cues from what Bernanke says about when tapering might actually begin, and about maybe to try to solidify when it thinks the quantitative easing is actually going to end as well. So those are a few things to keep in mind. The bond market recovered nicely last week, being up 118 basis points on the week from the prior week, which had the huge sell-off based on the better than expected employment numbers. So be safe with your loans. If you've got any, like I say, that are going to be closing within the next 30 days, especially within the next 7 to 15 days, I would lock. If you do decide to float, anytime we get some good improvement, I would go ahead and take advantage of that. Hope you have a great day. Feel free to call me at 702-812-1214 if I can be of any help at all. Again, this is Jed Wonderly with the Mortgage Market Minute. Take care and make today great.